In this video, we're going to be going over exactly how much dividend income I made in the month of April from a $289,000 account. And to break this down, we're going to be jumping into the Ticker Data Portfolio Tracker, looking at my investment dashboard, my dividend dashboard, my dividend calendar, my daily dividend calendar, and then, like always, projecting out what my portfolio will look like in the future so we can see exactly how long it will take me to achieve my long-term goal of one day living off dividends. And like always, if you like this spreadsheet and you'd like to use it for yourself and also get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials directly into your spreadsheet, then you can head over to tickdata.com at the link in the description. Now let's go ahead and dive in. But first, I'd like to say thank you to Dividend Wealth for sponsoring this video, where you can currently get 40% off lifetime plans at the link in the description. If you're tracking dividends by hand, then you're making a massive mistake. Dividend Wealth can completely automate your portfolio tracking. Dividend Wealth shows you exactly what you can expect in dividend payments every single month and even years into the future. You can see your annual income, monthly dividends, and year-to-date realized dividends, and even your projected total. You can set your assumptions and make some goals to see exactly how far away you are to achieving your long-term goals. You can closely track your holdings and even see things like yield on cost. And perhaps most importantly, in my opinion, is you can see your allocation versus income by sector. In this example portfolio, you can see while the allocation to energy is only about 12.5%, it makes up 16 to 17% of the total income, something you need to be aware of. And of course, you can see exactly when those dividend payments will come in by utilizing the dividend calendar. Now is the time to quit guessing and take control of your portfolio. Scan the QR code or use the link in the description and use code Dividendology25 to get 40% off lifetime plans. And right from the get-go, you can see that the portfolio is sitting at new all-time highs at $289,000, with over $100,000 of that coming purely from gains. So I'm extremely happy with the results that my personal portfolio has been seeing. And what's really interesting about this is 2026 has been a very interesting year so far. We saw a somewhat significant market pullback in the month of February and March, and then we've seen a very massive recovery. April was one of the best Aprils we've seen in years. And year-to-date, the S&P 500 is now actually up close to 6%. So the market is now sitting at around all-time highs. And this past week was a huge week in terms of major companies releasing their earnings reports. There was certainly some big winners and some losers, but my portfolio saw a lot more winners than losers. Just a couple of examples. Some stocks that don't get talked about nearly as much, but a high-yielding position in my portfolio, Mo Ultra Group, is up about 24% now in the last year. Texas Instruments, a stock I've been covering for years on the channel, up over 57% year-to-date, and in the last year now up 76.5%. Another example, one of the huge winners in my portfolio, Caterpillar, now up 47% year-to-date, and in the last year, a mind-blowing 181%. This stock is really somewhat of an accidental AI play. So, all in all, earnings week was very kind to my portfolio. Now, if we start to break this out even further, we can see I'm sitting on about a 7% cash position, but obviously I'm heavily invested into equities. I have about 26 holdings as of right now, which you can see right here by looking at the cost versus the market value. Now, essentially, all we're doing is looking at how much capital I've put into each position and what the market value of those positions is as well. So, for example, if we look at Broadcom, all in all, I've invested a little over $5,000, but that position is now worth well over $17,000. So that's another huge winner in my personal portfolio. Obviously, you can see an outlier here, SCHD. It's been a good performer in my portfolio. Obviously, a very nice starting yield and growing dividends at a very high rate, which again will help me achieve my long-term goal of one day living off dividend income. Now let's go ahead and take a step back and look at the actual percentage growth from each of the positions in my portfolio. Now, one of the things to keep in mind is this isn't a perfect way to look at it because, for example, with Broadcom, I've added new capital to this position many times throughout the past few years. So on my original cost basis, I'm actually up over 700%. But as I've added new capital, my average cost has gone up, making my AVGO growth about 239% when accounting for those newer positions. But with that being said, there's obviously still some dramatic growth from many of the positions in my portfolio. Like I mentioned, Caterpillar has been a major winner lately. I'm up over 400% on this position. And then there's been some bank stocks that have performed very well also. JP Morgan up over 200%, Bank of America 100%. A few other positions that are around 100%, you can see EPD, a high yielder. We can see Cisco, 122%, Apple, 107%, and then ASML, one of the stocks that I added the most capital to last year and covered a ton in 2025, up around 115%. Now here's the reality about my portfolio. When you're looking at these positions, one of the things you'll notice is the vast majority of these have lower starting dividend yields. For example, Broadcom, a lower yield. Visa stock, a lower yield. Microsoft, a lower yield. ASML, certainly a low yield. If my goal is to one day live off dividends, why do I have these positions in my portfolio? And that's the exact question I would have asked when I was starting out as a dividend growth investor. But here's the reality that we have to understand. I discuss this in every portfolio update video, but it's so important to understand this concept early on. The reality is that in the short term, high-yielding dividend stocks certainly pay out more in dividends. There's no doubt this is the case, but the reality is that dividend growth stocks that grow the amount they pay out in dividends every single year at a high rate, eventually will surpass high-yielding stocks. So, what does this actually look like? Well, if we jump over to the dividend breakdown sheet here from Ticker Data, I've already plugged in Domino's Pizza. Now, it's no secret Domino's Pizza hasn't performed very well in the last 5 years, but here's why it's a good example when it comes to dividend growth. The yield is sitting at about 2%, but look at how rapidly they've grown the dividend payouts over the past decade. In 2015, they paid out about $1.24 per share. But look around where it's sitting in 2025, close to $7. So they more than 5x'd the total amount of dividends that they're paying out in a 10-year time period. Now there's a couple of different reasons why this is so interesting. The chart I posted here is one I posted to Twitter X. Give me a follow over there if you're not already. But it shows the median household income in the 21st century. So when we look at just nominal income, we can see it's grown from around $40,000 to $87,000. That seems like decent growth at first glance over around a 25-26 year time period. But the reality is, if we adjust this for inflation, we can see it's only grown from around $79,000 to $88,000. For those of you who aren't great at math, after inflation, that's only about 0.3% annual growth. So take that into consideration for just a moment. 0.3% annual growth. That's the growth of the median household income in the 21st century. Compare that to dividend growth stocks, for example, like Domino's Pizza, which increased the amount they paid out in dividends over the last decade by 5x, over 500%. That's a 10-year dividend CAGR of 16, almost 17%. This is the reality for many of the holdings in my personal portfolio. Many of them are growing their dividends at high single digits or even double-digit rates. Now, when you're looking at my portfolio, you might be thinking, that makes a lot of sense. Then why is there some high-yielding positions in the portfolio? Well, just because I consider myself a dividend growth investor doesn't mean I ignore high-yield opportunities. But I will mention, high-yield investing can be dangerous if you don't know what to look for. This is something I discuss frequently on my newsletter, Dividendology.com, and generally speaking, there's 5 types of high-yield opportunities that I research, analyze, and cover over there pretty frequently. We have covered call ETFs, we have MLPS, REITs, real estate investment trust, BDCs, and preferred shares. The way you analyze each of these asset classes is dramatically different from each other and from traditional equities. And this is why so many people make mistakes when trying to buy high-yielding assets. Now, with that being said, over on Dividendology.com, like I said, I provide a lot of in-depth research into these high-yielding assets, and we're even building out a real money high-yield portfolio that's currently yielding over 9% and has seen share price appreciation as well. So, definitely sign up for the newsletter if you haven't already. And even with my personal portfolio, you can see the high-yielding positions that I own have actually done extremely well. Like EPD up almost 100% was yielding over 7% when I bought it. Ultra was yielding over 9% when I added shares. I'm up almost 94%, and then MPLX was yielding around 8.5% when I added it just a few months ago, already up close to 16%. Those are really the only 3 high-yield positions in my portfolio, but all have performed extremely well. Now, if we look at the diversification, you can see 40% into ETFs, with about 60% into individual positions, with Visa, Microsoft, and Broadcom the larger individual positions. These are each positions that I feel quite confident in the long term. Then, of course, SEHD, my only ETF in the portfolio, has done extremely well so far in 2026. If we scroll down, we can see my allocation by individual industry. One of the things you'll notice is tech is really my largest allocation at about 22.5%. financial services at 12.5%. And other than that, most sectors are somewhere in the single digits. As you can see here, real estate, a little bit larger at about 6.5%, energy at close to 4%, consumer defense of 3.9%, and healthcare at just 2.5%. But now I want to go ahead and jump over into what everybody wants to see, and that's how much dividend income I made in the month of April. So if we go ahead and jump over to our dividend dashboard, if you're a frequent viewer, I change things up a little bit. So let me know what you think of this dashboard. But in the month of April, if we blow up this chart, you can see I generated around $397.13 in dividend income. Now, a lot of the times new viewers will make a comment after seeing this amount of dividend income and state that it doesn't seem like a lot, considering what the portfolio value is. And yes, you're correct, but we have to remember what we discussed earlier in the video. High-yielding dividend stocks certainly pay out more in the beginning, but dividend growth pays out more over the long term. So, less dividend income right now, but more dividend growth, maximizing dividend income over the long term. And even then, if we look at the trend, it's clear we're starting to see the snowball effect start to take place. And this becomes even more clear when we look at my projected annual dividend income over time. Essentially, what you'll notice about this chart is it looks dramatically different from charts that show potentially share price appreciation. When you buy a stock, you'll have years where the stock grows, and you'll have potentially years where the stock can pull back significantly. But the beauty of your projected annual dividend income is if you're buying high-quality stocks that continue to grow their dividends every single year. Even if you're not adding new capital to your portfolio, your projected annual dividend income is going to grow essentially every single month. And you can see that's continued to be the case for my personal portfolio. In fact, in the month of April, we hit a major milestone. We're now projected to generate over $8,000 in annual dividend income. So think about that for a moment. Even if I don't add any new capital to my portfolio, over $8,000 every year, and that number will continue to grow as I reinvest dividends and the underlying holdings in my portfolio continue to grow dividends at a high rate. For example, I added very little capital to my portfolio in the recent month, but my projected annual dividend income continued to grow at a high rate. On top of that, my portfolio value grew significantly. It went from about $265 to $289. So April was a huge month for me for a multitude of reasons. Now, as we talk about diversification, again, this is important. If you're a dividend investor, any type of dividend investor looking to one day live off dividends, you need to be tracking this, and here's why. Notice how real estate makes up about 13.4% of my dividend income. But if we look at my allocation by industry, I only have a 6.5% allocation to real estate. So the reality is, even if you have a small allocation to a certain sector, it can make up a large portion of your dividend income, which is a potential risk. So for example, maybe somebody had a 15% allocation to rates, but it made up 50% of their dividend income. That would be a major risk. It's something you need to be aware of and something you need to actively be tracking. Now finally, right here, you can see basically my dividend yield on cost for a lot of the different positions in my portfolio. Like I mentioned earlier, you can see a few of the higher yielding positions that we've already pointed out, but most of them have lower yields on cost. Now what's interesting is, for example, let's look at maybe a stock like JP Morgan. You can see JP Morgan, my yield on cost is 5.41%. Now you might be thinking that's interesting because if we look on Seeking Alpha at JP Morgan, you'll notice that the starting dividend yield is just 1.92%. Why is my yield on cost so high? Well, again, it's because JP Morgan has grown their dividend payouts at a very high rate. So if we look at my initial cost basis relative to the dividends they are paying out now, then obviously my yield on cost is significantly higher, and it's only going to continue to grow as JP Morgan and the other holdings in my portfolio continue to grow those dividend payments. And keep in mind, my yield on cost also doesn't account for the fact that I'm reinvesting dividends. You could technically argue that that would boost your yield on cost to a certain degree as well. So we can now see my all-time dividend income over $20,000. Average monthly dividends close to $670. Let's go ahead and jump over to my dividend calendar to see exactly where this dividend income came from. So there's a lot of cool features of dividend calendars. I know I've covered this before, but I can see exactly how much each position has paid me in totality, how much I'm generating each month, and most importantly, it's incredibly easy to see what dividend growth actually looks like over time. So for example, Really Income over the years has paid me over $1,000. But look how this has changed over the years. Back in January of 22, They paid out about $5.83 in one single month. Move forward a little bit later, it jumps up to $17.89 by April 23. Move forward by April of 24, 26, and 23. And if we look at the most recent dividend payout, it was $30.83. That's the snowball effect taking place. Yes, a couple of times when there was good opportunities, I added some new capital, but really income constantly growing their dividend payouts, and I'm continuing to reinvest dividends. So that payment grows every single month. Now, where did my dividend payments in the month of April actually come from? Like I said, we generated close to $400, Coca-Cola paid close to $25, Altria around $110, really income close to $31, Vichy Properties $176, JP Morgan at $16.29, Cisco a very small payment close to $2, and then Novo Nordisk, a stock that's down pretty significantly over the last half year or so, really the last year, paid about $37.32. So that's where my dividend income came from in the recent month. If we jump over to the daily dividend calendar, we can look at things with a little bit of a different perspective. What days have I been paid dividend income so far this year, and specifically in the month of April? Now, what we can see is, in April, we got paid a day on the 1st, the 8th, and 9th, both pretty solid days. On the 15th, looks like we received close to a $31 dividend payment, and then a big day on the 30th. And so far through 4 months in 2026, we've generated around $2,321 in dividend income. Now again, the reality is, if I was looking to maximize dividend income, that number could be significantly higher, but we're focusing on dividend growth. And you can see the snowball effect taking place when we look at the dividend calendar over the years. 2022 in totality, we generated under $2,300. Every single year, you can see that number continuing to grow higher and higher. So yes, the snowball effect is taking place. Now finally, we need to project out what my portfolio will look like in the future, so we can see exactly how far away I am from being able to one day live off dividend income. And you can see the assumptions we're making right here. We're plugging in the starting portfolio size. We're assuming monthly contributions of around $2,500, which will vary. This last month was significantly less, as I mentioned earlier. And then we're assuming a price growth rate of 7% and a dividend growth rate of 7%. And of course, we have to take into consideration the fact that your cost of living grows over time due to inflation. So, with all those assumptions in mind, how far away am I from being able to live off dividends? The black line is our cost of living. The red line is our monthly dividend payments. So right here is the point at which we could live off dividends forever. So let's dive into the numbers and see what this actually looks like. If we start to scroll down, what we can see is by year 5, we're still not at the point which we could live off dividends forever. However, we are generating monthly dividends of over $2,000. If we keep scrolling down, we can see year 10, still not quite there, but we're generating over $4,000 a month in dividends. If we scroll down a little bit further by year 12, what you can see is we'd be generating more monthly dividends than our monthly cost of living, meaning we could live off dividends forever. And here's the important caveat you have to note. You might be thinking, yes, but that means you stop reinvesting dividends. So, wouldn't your monthly cost of living due to inflation actually start to pass your monthly dividends? And the short answer is actually no. Not if the holdings in your portfolio have a dividend growth rate that's higher than the rate of inflation. That's the beauty of dividend growth investing. Now, on top of this, I will mention, yes, when we model this out, it's showing about 12 years. But the reality is it could be much sooner if we start to switch to a higher yielding strategy. Maybe around year 8, maybe around year 9. Just something for us to think about. Now, if we look at this at a much higher level overview to see what this would actually look like over time, jump back over to the investment dashboard. We can see our future portfolio outlook. If we don't reinvest dividends over the next 10 years, we could still generate about $35,000 in yearly dividends in 10 years. But what about if we do reinvest dividends? A decade from now, we'd be generating close to $46K a year. What about 20 years from now? Around $148K. If we don't reinvest dividends, it's down all the way to $83.8K. And 30 years from now, it'd be generating close to $180K if we don't reinvest dividends. But look at this. If we do reinvest dividends, it jumps all the way up to $431,000. That is the power of the dividend snowball effect. So there you go. That's my portfolio update for the month of April. Go ahead and let me know what you think in the comments down below. Again, if you'd like to go to download this spreadsheet, then you can head over to tickerdata.com at the link in the description. It allows you to automatically import stock financials directly into your spreadsheet. And again, thank you to Dividend Wealth for sponsoring this video.